What is going on, guys? Trades by C here. Today I'm going to do a little bit of a market recap. I want to run you guys through my trade that I took yesterday that ended up taking me over $800 in profit on my trading combined, and I'm actually pretty close on passing this account. I can see here we're at $52,000. Need to get to 53 to pass this account, so we're pretty close. But I want to just go over a little recap of what I did yesterday. So on the MES here, this is pretty much where my chart was when I got into the market. It was intraday, so it wasn't when any sessions were open. So first thing I noticed was we have these relative equal lows over here on the 13th of June. And we ended up sweeping this sell side level, the sell side liquidity. So overall, this was a massive sell-off. This was a sell model and the market maker sell. And we ended up sweeping these relative equal lows, right? So we had a manipulation move here, and we ended up having a change in the state of the delivery. And then we inverse this fair value gap here. Alright, so if we go down to a 5-minute time frame here real quick. So we'll just mark it out here. So this fair value gap got inversed, right? So we have a complete reversal of price now, which indicates to us that we're in a buy model now. So this as well, including if you go into MNQ, right? We have to have a look at this. So we got relative equal lows here. If we go back to ES fails to make that low there. So we have a bullish SMT put in. So all this combined, right, after looking at the market maker buy models, right, you need to have all these confluences in place to be able to take a trade. So we had a sweep of sell side liquidity, right? We had this manipulation move down. We had an inverse fair value gap here with a change in state of delivery. So all that plus this bullish SMT, it's a lot of confluences for us to enter price and target the buy side now of liquidity, because price likes to hunt liquidity, return to equilibrium, fill inefficiencies, and generate liquidity. So after doing all this, we're expecting price to reverse now. If we look at the daily time frame as well, overall we're still bullish, right, over these months. I still want us to see this price level here get taken out. Right, we've got these relative equal highs here. Still in a buy model overall, right? If we were to displace lower than this level here, right, we would be in a sell model, right? We'd be selling back off down, getting all this sell side liquidity that's been made here. And that's when I'd look for a massive sell-offs. But currently we're still respecting this level here, right? So we made a relative equal lows there, respected it there, and we've respected it again. So I'm still expecting us to push to this buy side here, sweep all that, and then maybe have a sell-off after that. But these are just models and models and models at the moment. So this is a high time frame model. So, you know, these are long-term movements. It's not short-term movements. So you can't expect price to just sell off that fast. These are long-term. These are over months. So we're looking for a model inside a model. That's why we drop down to the lower time frame here. I like the 5-minute time frame because it gives you a pretty good indication of what price is doing, right? Any lower, like 1 minute, it's very volatile. It's very fractal. So you could get signals that look like your model, but in reality it's just smaller time frames, so you're not going to actually have clear, concise confluence on price action. So I stick to the 5-minute and then go to high time frame for confirmation of that movement, right? So but overall, right, we got an ICT perfect. This would be A++ setup, guys. Literally no hesitation to enter this trade, and then I end up just entering pretty well straight away. I don't wait for a retest, right? Because we've had this order block here now, right? So we had the daily opening gap here, right? We had that little break, opened higher, inverse this fair value gap, push higher, and then we get this order block here, which price retests into it twice there, back to equilibrium of that, and then continues higher. So I don't really want to wait for a retracement of price. Like I could have entered back here, but I don't really see a need. Price was still having little movements at this point, right? So I just entered there, put my stop loss pretty well below this level here, because if we were in a sell model, right, this would get disrespected again straight away. So this change in the state here, the order block would get ran through, and then this inefficiency here would get ran through as well. So if all that happens, then you know that your model is not working for the day, and then just take your loss, right? There's no point of continuing to move your stop loss, right? So if you see clear indication that these levels are getting swept, this inefficiency is getting ran through, and then you're still pushing down, like it's more than likely that it's in a sell model. So, but those days can happen. But overall, so A++ setup, right? No hesitation on this day. Right, so I just want to show you guys how I managed to figure out where my take profit was going. So usually what you want to do, right, wherever your manipulation move was to sweep that side of liquidity, look for that last move down of the same either down closing or up closing candles. So as you can see here, we got 1, 2, 3, 4 down close candles here to sweep that liquidity level, right? So get your standard deviation, mark the lowest point to the highest point, and then as you can see, we got this 200 to 250% range here. Now if we put a line there, right, at the 200 range, and we go back, right, we want to have more confluence than just the standard deviation, right? We want to have something that aligns with that. We want to have a buy side that aligns with that level there. Now, if we look back here, right, on the previous day session, if we zoom in here, you can see perfect relative equal highs here. So that is going to be our take profit level, because price loves to hunt these relative equal highs here, right? It's a good level of liquidity. So that perfectly aligns, right, with this 200% level. So that is going to be our take profit level. So that is what I did when I entered this trade. Put my take profit up here, my stop loss down here. If we're in a sell-off, price is going to run through these levels, run through this order block, fill these inefficiencies, and then continue lower. So stop loss is just below this opening gap here, because I think it's going to be left open for later, and then take profit at this relative equal highs here. And if you can see in this price movement here, perfect where we put it. So we entered at 620.75 and ended up taking profit at 665.75. So that's a perfect 40-point move or 160 tick move there, which is a pretty big move, right? But I'm not here sitting watching the price move all day, all night, right? I entered at 1 p.m. and just let it run overnight, right? So it's a 9-10 hour trade, but I'm not watching it, right? I'm doing other things. I'm busy. I'm not sitting here watching this because I have so many confluences and I have conviction in my trading where I don't need to be watching it, right? And I don't really care if it either hits it or it doesn't. I'm going to be happy regardless, because I'm convicted in what I'm doing and then how I'm doing it, right? So that's how you guys should be thinking. You shouldn't be watching it like a hawk, because all these price movements, you're going to be freaking out. Oh my God, it's coming down. I'm in negative $200 right now, right? You're going to be freaking out. So just have conviction, set reasonable take profits. Don't be setting something crazy like aiming for this drawn liquidity up here, because it's not going to happen today, right? It's going for the next level so I can keep moving. So that's all I did. Simple as that. You don't need to overcomplicate trading, because that's when you start losing money. So keep it simple. That's pretty well all I do to trade, right? I just use ICT, market maker buy and sell models. And then if you're really, trying to get your trades in, if you see that you just swept this high, right, you're going to have a sell model straight away. So this is your manipulation move here, right? Change the state, and then you sell off. So we inverse that fair value gap there, right? So you could even instantly reverse this, right? So standard deviation with that, look at that, it perfectly falls in line with that level there. So even this 400% gets tapped into perfectly. Look at that, literally perfectly. So it's just about identifying models, guys. It's about just being aware of what you're actually trying to achieve. Don't try to look for things that aren't there, right? So I've had a lot of confluences in the market to allow me to enter. I didn't just think, oh yeah, price has to go to the buy side now, so I'm going to enter. Nah, I need confluences. I need multiple things to be able to enter. SMT, inverse fair value gap, change in the state, drawn liquidity, right? We have all these confluences that work in our favor to give us a high probability trade. So I'm going to keep you guys updated. Hopefully my next video is going to be passing the combine, and then yeah, we start getting payouts. But if you guys want to see some more entry model videos, make sure to like, comment, and subscribe. I can go more in depth in how to actually identify these